So daily time frame is in a uptrend, and price retrace all the way to this daily higher low, and we like to look for an opportunity to look for a potential long here. Okay, so what we do is we go down to a lower time frame. We focus on this area, the 4-hour time frame. Now in 4-hour time frame, we saw price actually move lower in the downtrend, move lower, do stop hunting, and we went off, and then go sideways. Now it's coming back again. Okay, so we are looking for a potential long here, knowing that this ERC gap will be filled. Now we saw that it get filled right now. So after you get filled, potential you can go down or you can reverse up. Right, so let's go down to lower time frame and see any indications that price want to go higher. We go to 1-hour time frame. Okay, so we are looking at the base of this ERC. Looking at this base of the ERC. The price is dropped into that level. Okay, go to 5 minutes time frame. In a 5 minutes time frame, you see the price actually make a double bottom, and it means that potentially we might see price coming back in the future. And over here we see there's trap order. Okay, so let's see. Price move lower, get rid of this stop loss. As I mentioned, there's potential trap order, potentially price might go down, which went down. So we can see the price now consolidate. Go down to 3 minutes time frame. Let's see whether get a better picture. Well, we can see that there is a preliminary support, selling climax, automatic rally. You see this spring, and price start to go higher, create some resistance over there, and price came down after price create a multiple low here, and here it moved price lower to stop hunting all this, and now it went back. So far what we see is consistently all the stop loss below the swing low has been taken out. You can see that this area of stop loss, market has been targeting all the stop loss below the swing low. Okay, this indicates that price want to go higher. Okay, so now we have to start looking for potential entry. Now what we see the market make a double top. It shows that price want to go higher. Also at the same time, price make a double bottom here. So it shows that price is going to continue stop hunting. It's going to come down to grab the stop loss potentially as well before it go higher. So let's see. Okay, so we have price trade a higher. See these two bullish candle. Okay, two bullish candle that we have there. So we took out the stop loss above the two swing high. Okay, let's see. Now we go to one minute time frame. In 1 minute time frame, we can see that there is this preliminary support, selling climax, automatic rally. You see a test, false breakout, right? At the same time, we see this is creating right now. Double bottom is creating right below. So potentially we might see the price come down again. Okay, we see the break. Price might come back to test to grab all this before go up. We know the price want to go higher. Okay, so now what we have is price already break the high, and it might come back fill this gap here. Okay. And also, you see the potential there is liquidity that price might come back, all this. Okay. So basically what we have is we have this range. We have this range. Use a different color. And we have no idea where it's going to react. Okay. This whole entire range. So let's see. This is a break. Okay. Price came back down and it go higher again, right? So we see there is a break. So now what we can do is you can put either buy at the market or put a buy limit at this high. This high. So we put a buy limit there. Stop loss. You can put it here, or to be safer, you can always put all the way down. Now we put all the way down, but of course that means that there's a lot of that is our risk. Let's go to 10 minutes time frame or 15 minutes time frame. So now we see there's a lot of stop loss above here. It tells us that, and there's gaps there. It means that price is going to fill these gaps, and potentially it might go all the way up to fill this stop loss. Okay, so our target can be somewhere around it. Just above it. Okay, so this is a potential trade that we can have. Risk reward is 2.5. Okay, so we go down to 1 minute time frame again. Now, of course, you can always put your stop loss there, but to have better risk reward, but I think this safer is always at the low here. Okay, so let's continue and see what happens. Okay, order taken in. You see, price came back. It triggered the order. Now, if we enter, we have this range to enter. Just now we're looking at this. You enter where the price make a high, right? So price pullback, we say that we are going to enter here to here. Okay. So price actually came back 50% of this range. So the price actually came back to 50% of this because price break. So it basically is we have a high, we have a low, we have a break. So it's like this. This is a high, this is a low, this is a break, right? So this is a high, this is a low, this is a break. So just now I put my buy limit here on this high, worry that I will not be getting in, right? So if we based on after the fact, we can see the price actually retraced all the way back to about 50% of this high and low down here. Okay, so that's another way of putting our buy limit, which is identify the range. Once we have identified the range, sorry, not this range, the high is here. This is the high, and this is the low. Identify the high and the low, and just pick 50%, or if you see there's a gap there, all right, or demand, you can always put a buy limit there. So in this case, this is a high, this is the low, this is a break, right? So 50% is around here, which if you put 50%, your order trigger, or if you put that this small little demand, your order also get triggered, right? Either way, order get triggered. Okay, so it's better than just put on the break here. Of course, yeah, we can pick up extras, just a few pips, but anyway, the price starts to go off. Come back again. Oh, Okay, come back to retest again. Come back to retest where we have the high. This is the high. Come back to retest. This is a low. This is the high. This is the break. Right, so price came back again after price made a convincing break. Price came back. In this case, if we take this convincing break, let's take this. This is a high. And this is the low. This is the break. Now, if we take the 50% of this range, the high is here, the low is here, and 50% is around here. Okay. Again, the order gets triggered. Okay. If you don't take 50%, then we can take this trap order. Again, the order gets triggered. Okay, here. Either way, different ways. Either you get the 50% of the high and the low, right? Percent, put the buy limit there, or you put the buy limit at trap order, stop loss here. Either way, you get in again. Okay. And you see the price start to break, start to move away. Okay, start to move away. Now our stop loss. Where's the multiple? Where's the area we can take profit? It is at all this high. So the price actually went up there. Trigger our take profit, right? Because why? Because this is where all the stop loss is. Right, so we enter here, stop loss, taking profit.